Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. We're going to be looking at the major indices today, and the first one we're looking at is the Dow Jones Industrials. And what I want to share with you today on this particular index is the fact that this key area that exists, this 1830 area, which you can see pretty much right here. You can see this is where the resistance is, right along this line here. So this is resistance, and the market really has to go over that level and close over there, which I think it will, and move higher. If that happens, then we're looking for a move from 17,700 to 18,300. So another 600-point move, which would take it close to what's it, 18,900, maybe 19,000 on the upside. But it must close over this 18,300 level. That's a very key resistance level on the Dow. This is the Nasdaq, and as you can see yesterday, there's a daily candlestick chart of the Nasdaq, and as you can see yesterday we had a signal on the weekly which pushed all of our trade triangles in a positive column at 5,103. It's 5,091, a little bit lower than where it was yesterday, but nonetheless this is a very good signal that this index wants to go higher. The other positive RSI line is above the 50 line, indicating the market wants to go higher. So I could see this Nasdaq going higher, completely higher for the week, and that's the positive we see in this market. I would not be surprised even today to see this market rally and close towards the highs of the day. This is gold, and we've talked about gold getting beaten up a little bit, but a couple of things you want to look at here, and that is the support you're seeing right around the 1180 area. You can just draw just a straight line right across here. Every time it's gotten down at this level, it's popped back up, and some of the pops have been $20, $30, $40, and I think that's the important thing to look at. So the way this is shaping up today, this type of formation, this sort of doji line in candlestick terms, indicates that where there's an equilibrium between the buyers and the sellers, not much going on. Plus, if you look at our weekly, that's still positive, indicating that the intermediate term trend is up, but the very, very short term trend right here on the daily is down. So if the daily turns green, then that would be an indication you would be a buyer, and gold is going to have another pop up to the upside. So let's watch that very carefully this coming week. Now, crude oil has enjoyed a very nice move from the lows and the pressure that was down back here in March, but we've had a nice move up, but we're seeing a little pullback now. The question is, how far is that pullback going to fall back to? How far is it going to come back? Well, one of the tools we have as a trader is an amazing tool called a Fibonacci tool, and that's right here on Market Club. All you do is click on that, so the little yellow box goes on the left hand corner. You click on the very highest price, and then you go to the very lowest price. And what you have is some key retracements: 38.2%, 50%, and 61.8%. So it's possible we could see crude oil come back to the 50% or even the 62% level in the near term. So again, our trade triangles for crude oil as the weekly and the daily, they're both negative, so they're both pointing down, so there's no reason to rush in there. But we're saying it's a trading range because the longer term trend is up, but short term is down. It's a trading range. So we could possibly come down to these levels sometime in the future, but I'd watch it for some area to be actually looking to be a buyer in this market, but not right now. Now this is the euro against the dollar, and you can see all of our trade triangles are negative with a minus 90 score. Not a good thing, but look at how this market is beginning to shape up. And what I want to share with you now is what I talked about before, and that was the Fibonacci. So we click on the highs, and you click here and drag to the lows, and you can see we're right in the 61.8% sweet spot where the market should begin to find support. Now that's the key, should begin to find support. It hasn't done so yet, but I would watch the indicator, the daily indicator first of all, and see how that turns out. But I would not be surprised to see this market pop up from these levels, maybe back to the 110, even the 113, 112 area. So let's play that by ear. But the other thing to look at is watching the RSI, and the RSI moving over the 50 line again. So if this were to come up like that, break the RSI line like I did here, you could have a nice rally on the upside. So let's watch that very, very carefully. So they're the markets we're looking at. They're the major indices. You can see All the indexes are positive, so the chances are that they're going to go higher. And you're seeing a mixed picture in gold, which means it's perfectly reflected. You should be out of the market now because the short term is negative, the intermediate term is positive. And on crude oil, you're seeing a mixed picture there. The longer term trend is positive, but the intermediate and short term are negative. And the euro dollar, well, that's all negative right now. But watch that Fibonacci number on that particular currency. Let's see what happens tomorrow. Be sure to tune into tomorrow's video. I'm going to share with you some ideas that I have for the weekend. Thanks for watching, and I'll see you tomorrow.